Assalamualaikum, I'm Safa, and today we will explore the Sharia audit exercise of Islamic financial institutions. The Islamic finance industry is highly regulated. In Malaysia, for instance, Islamic financial institutions must adhere to rigorous standards set by Bank Negara Malaysia, which mandates full Sharia compliance under the Islamic Financial Services Act 2013. Sharia refers to Islamic law from primary sources like the Quran, Sunnah, Ijma, and Qiyas, as well as the secondary sources like Maslahah and Arf. Compliance in the context of Islamic finance means following resolutions by the Sharia Advisory Council. Sharia compliance is vital for Islamic financial institutions. Non-compliance can lead to severe consequences, including up to 8 years in prison and fines up to 25 million ringgit under the Islamic Financial Services Act 2013. Financially prohibited earnings must be given to charity, causing losses. And most importantly, it can damage an institution's reputation, causing a loss of trust among investors and depositors. That's why the Sharia Governance Policy Document 2019 emphasizes the importance of managing Sharia non-compliance risk to prevent such issues. According to Bank Negara Malaysia, the Sharia governance framework ensures effective oversight, responsibility, and accountability within Islamic financial institutions. The Sharia Governance Framework 2010 introduced control functions to manage Sharia non-compliance risk. Ensuring Sharia non-compliance requires an internal Sharia control mechanism that regularly checks and reports. These include Sharia risk management, Sharia review, and Sharia audit functions. The Sharia research function is no longer identified separately under the SGPD 2019. Bank Negara Malaysia defines Sharia audit role as an independent assessment that ensures Islamic financial institutions' internal controls, risk management, governance processes, and overall operations comply with Sharia principles. Sharia audit serves as the third line of defense in internal control that provides objective assurance of Sharia compliance. Based on the Sharia Governance Policy Document 2019, there are four main responsibilities of Sharia audits, which are to establish an audit methodology, generate an audit plan, and audit programs to guide internal auditors, and communicate the results through an audit report. Sharia audits are typically conducted by internal auditors who have experience in auditing and additional knowledge of Sharia principles. However, there is still no standardized requirement for a qualified Sharia auditor. The Sharia audit process is divided into 3 phases. Let's focus on the first phase, which involves 5 key steps. The first step begins with understanding the business, industry, operations, governance, and strategies to identify the client's risks. Preliminary analytical procedures are then conducted to investigate significant changes in financial data. Then, the auditor sets materiality and Sharia risk levels, depending on the client's company size. The next step, the internal controls are assessed to ensure its effectiveness and efficiency. And finally, a comprehensive Sharia audit plan is developed, outlining its objectives, scope, and methodology. The primary objective of Sharia audit usually include ensuring compliance with Sharia principles and verifying that the institution's rights and obligations exist. The scope also covers audit on financial statements, organizational compliance, and governance processes. The plan should also include checklists to compare the institution's practices against Sharia rulings, policy documents, committee decisions, and previous audit results. Other components that are included also personnel assigned to the task, sample size used, expected and existing internal control, and duration of the audit. The second phase of the Sharia audit process involves 5 key steps, each focusing on various audit tests. First, auditors perform tests of controls to gather evidence on the effectiveness of internal controls. Second, they conduct substantive tests of transactions to evaluate the integrity of data and accounting records. Analytical procedures are then used to compare financial information with prior periods, budgets, forecasts, and data from other units, usually performed at different stages of the audit. Next, auditors test compliance by comparing the organization's adherence to control procedures. And finally, they assess Sharia non-compliance risk and its potential effects, categorizing the risk as either low, medium, or high, based on the significance and impact on Sharia principles. The third and final phase of the Sharia audit process also comprise 5 key steps. First, auditors accumulate various forms of evidence, including physical examinations of tangible assets, confirmations from independent third parties, and analytical procedures. And there's a lot more, all tailored to meet audit objectives. Next, the auditors meet with the process owners, typically the management team. Then the auditors evaluate the results and provide rectification measures, particularly when potential Sharia non-compliance is identified. The process also concludes with the issuance of a written Sharia audit report, which is communicated to the board of directors and the Sharia committee. To better illustrate the Sharia audit process, let's consider a simplified example for, let's say, company ABSC, where the objective of this Sharia audit is to evaluate the Tawarruk contract and its compliance with Bank Negara Malaysia's policy document. So in the policy document, there are 4 main pillars required in a contract: contracting parties, offer and acceptance, subject matter, and price. To verify these, the auditor plans to examine the certificate of incorporation to ensure legal capacity and entity status. Also, they can review the sale and purchase agreement of proper offer and acceptance and observe the storage location to confirm the existence of the subject matter. And they need to also check that the price is determined and agreed upon in the contract. That is all from me. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.